Good morning. Here's your Indian Startups update wrap. Quick heads up, this is an AI-generated summary based on multiple sources. Please verify key info independently. Also, none of this is financial advice or a buy-sell recommendation. Alright, let's dive into the latest news. First up, there's some troubling reports about a company, BDR, allegedly inflating its business numbers. It's said they showed fake invoices, business purchases made through Daily Hunt to boost their sales figures, a classic case of some startup culture frauds coming to light. And similar stories are emerging across the sector. Some startups are reportedly manipulating sales data, claiming revenues inflated by up to 8 times. For example, a company reported 450 crore rupees in fake sales but was actually generating much less. On the financial front, NK announced a profit of 74 crore rupees for FY25. Now, that sounds decent at first glance, especially with revenues around 8,000 crore rupees and a valuation exceeding 57,000 crore rupees. But the question is it truly profitable? With such a low profit margin, it raises eyebrows on whether the valuation reflects real success or just inflated figures. Meanwhile, a big unicorn company with a valuation of about $1.5 billion recently filed for bankruptcy. They cited depleted funds and revealed that initial revenues were fabricated from fake sales. It's part of a recurring pattern. Many startups generate fake sales, then try to hide losses through complex financial maneuvers, which can be misleading for investors. In the same vein, the startup ecosystem continues to face scrutiny. When scandals pop up, often those involved are shielded or manage to escape serious consequences. On another note, the government is tightening the screws in various areas. For instance, they have ordered Indigo to halt leasing Turkish aircraft due to diplomatic tensions, extending only till 31st August. They also advised e-commerce companies to stop selling walkie-talkies, mainly for security reasons, because unregulated radio use can pose risks. The government also relaxed some rules around foreign investment, removing the 10% cap on sovereign investments from Saudi funds. Now, Indian companies can expect higher foreign inflows, which could boost investments but also raise concerns over inflow transparency. Switching gears to international trade, US President Trump has increased steel tariffs from 25% to 50% starting 4th June, impacting global trade dynamics. Coupled with ongoing legal and trade tensions, it's another sign of rising geopolitical uncertainties. In the tech world, Nvidia is making headlines with impressive quarterly revenues of $44 billion, up 69% year-over-year. Their CEO predicts AI infrastructure will become mandatory, almost like power or internet costs. It's a signal that AI and cloud processing are moving from luxury to necessity. Microsoft, interestingly, has filed for bankruptcy, but not globally. The filing seems tied to geopolitical tensions, especially around the Russia-Ukraine conflict affecting their operations. In the social media and regulation space, Meta, formerly Facebook, has tightened rules around real money gaming advertisements, latest move in a trend of stricter regulations, especially as Indian authorities scrutinize online betting and gaming apps. On the telecom front, Vodafone Idea reported a massive loss of 27,383 crore rupees, though slightly better than last year's 31,000 crore rupees. Still, a tough outlook remains. High spectrum dues, legal disputes over Agar, and increasing debt levels continue to weigh heavily. Similarly, DTH operators like Tata Play and Airtel Digital TV are facing license fee hikes based on revenues that are falling due to the rise of OTT streaming services, further squeezing their market share. Moving internationally again, the Indian government has restricted airlines like Indigo from leasing Turkish aircraft, only allowing a 3-month extension amidst diplomatic tensions. Finally, a quick note on the financial landscape. The US has increased steel tariffs, global trade remains tense, and the tech sector is booming with investments in AI infrastructure. All these show a rapidly changing scene, urging investors and industry watchers to stay vigilant. That's your quick roundup for today. Stay tuned for more updates, and as always, stay informed. Thanks for listening.